Good morning, guys, and welcome to the show. Really glad to have you guys here. Today is Friday, March 29th, 2019, and we got a lot happening with the Brexit. I'm going to tell you what. Now, here's where we're at right now with the Brexit. They're going to put it to a vote today, and they're going to be done by 7 p.m. Eastern Standard Time. So we won't have the results until the stock market is closed for the day. And basically what this means is that we're not going to have any market reaction until Monday. Now, here's the thing. If they can get this vote passed through Parliament, the British Parliament, then at that point, Monday, we should have a up day in the markets. You know, and this rally will probably continue. But here's the thing. If they vote it down, that means that on the 12th, they don't have many options left other than a hard Brexit. And this might dawn on investors, really start to dawn on investors Monday. And we could have a very bad Monday. So we're going to have to wait and see what happens. But Monday is probably going to be the reaction day to the vote that's going to happen on Friday, today. This is what we got going on with Brexit. And anyway, I want to say something about the markets right now. You know, the Fed changed monetary policy. At the markets, they didn't go down very much. You know, and the Fed's changed monetary policy. So I'm expecting the markets to go down again and for the Fed to even change monetary policy to become accommodative. They haven't become accommodative yet. I'm expecting a dip in the markets and the Fed to become accommodative, go back to quantitative easing, and actually bring interest rates back down to zero again. This is what I'm expecting the reaction from the Fed's going to be. And then, to support the markets further, see, after 2008, when 2008 happened, we never expected this monster of a reaction from the Fed in the first place. And they're not expecting the Fed to react the way I expect them to react. So, you know, 30,000 Dow is not out of the question once the Fed reacts. The sky's the limit for how high the Dow can go. They're not going to let this Dow go into this ultimate monster crash of deflation. They're going to keep supporting this market. So you might say to yourself, well, why don't I buy into the market? And yes, you can. But you should buy when it's at its lowest, which I think is coming. I think there's going to be a dip coming. And then the thing is, then the market will go up. But here's the caveat. The caveat is the dollar's going to be starting to lose value at a certain point. When the market does get really high again, the dollar's going to start to lose value very quickly. And so what you've bought into is a market priced in dollars where the dollar is not worth near as much. This is the environment we got coming. And this kind of environment is very, very wonderful to support the gold market and silver market. Gold and silver ultimately in the end is going to be a big winner because it's been suppressed for so long. It's like a coiled spring. And gold and silver are going to break free. They're going to break free, and they're going to do better than the market even. So the market's probably going to do good in the future after this little deflationary pressure, downward pressure ends, and inflation starts to take off. So ultimately, that's where we're headed. So we could actually get our market crash on Monday when the Brexit vote comes in and the market realizes, hey, you know what? They didn't pass it the third time. It's not going to go to a vote for a fourth time. The 12th of April is coming up really fast, and Brexit is going to, Article 50 is going to come into effect in the European Union. The Brexit is going to make a hard departure. When they realize that, possibly on Monday, depending on this vote. So that's why I'm watching this vote so carefully. Now, what is the markets doing? We got to take a look at the bonds this morning. Let's get the markets open right here, and let's get this show started, and let's take a look now at the silver price. She's swooping upwards this morning. She's up 14 cents. She's starting to make back some of the losses that she made the other day. I hope you guys got a little bit while it was cheap. Because the price is going back up again. It's up to 15.12 and climbing. Let's take a look at gold this morning. Gold's at $12.97. She's climbing back up. She's starting to head back up toward $1,300 again. Ultimately, in the end, I think that these are going to be proved. That gold and silver are going to be proved in the end to be two real safe havens for putting your money in the physical world. Something that you can actually hold in your hand. And just remember, if you don't own it and you don't hold it in your own hand, then it has counterparty risk. If you take your gold and you put it into a storage facility someplace, those storage facilities are connected to the banking system, and there instantaneously it takes on counterparty risk. So if you don't want it to have any counterparty risk, you've got to hold it yourself as a physical asset that you can actually hold in your hands, which is nice too, because you can go and take a look at it, and you can, you got it right there. Anyway, let's take a look now at the Bitcoin and see what Bitcoin's doing. Now, this is an asset you can't hold in your hand, but it is not like fiat currencies in the respect that fiat currencies, they can print them to infinity. There's no end to how much they can print. We're going to see that they will do this. They're going to print fiat currencies into obliteration. But this, even though it's a digital asset, like the dollar's digital now, so this is digital too, but this has a hard limit on it that can never, there's no way that they can actually reset that hard limit. It's set in stone of 21 million. There will never be more than 21 million of these coins. Ever. And in fact, they're losing them. They're losing coins because every time somebody spends these, sometimes people have an old laptop and they forgot they have like maybe 1% of a Bitcoin on it, and they just forget, and the laptop goes in the dump. And they've lost that coin forever to the 21 million. And so it's a dwindling supply, to tell you the truth. But we see this heating up. 4,083 today. Yesterday it was 4,007. It's heating up. It's moving up. If we take a look at pull back on the chart, you can see it's moving upwards in price. Take a look at cryptocurrency market capitalizations, 143.4 billion. And Bitcoin dominance of 50.4%, and we can see the market heating up. EOS is doing really well. Now, we've had a little bit of a turnover in Litecoin, but it doesn't go down very much. So we're looking at prices of just over $4,000 for Bitcoin, 4106 here on Ethereum is 141, XRP is 30.7 cents, EOS is $4.32. Litecoin is 61.32. Bitcoin Cash is 169. Binance is at $16.72. Stellar is at 10.7 cents. And Cardano is 6.8 cents. And Tron is 2.3 cents each. It's amazing, that Tron has that big of a market capital, of 1.5 billion. And it's only 2 cents a piece. Shows you how many of them there are. 66 billion of them. Wow, that's a lot. But Litecoin here. We're just going to analyze this for a minute. There's only 61 million Litecoins, and at $61 a piece means that Litecoin is actually undervalued a little bit right now compared to the amount of coins that are out there. If I haven't done the math on it, but there's 17.6 million Bitcoins in existence right now at a price of $4,100. And if you divide that into the amount of Litecoins that there are, 61 billion, Litecoin should be not $61. It should be more like $500 a piece or something like that. But you know, it's turning upwards now this morning a little bit. So now let's take a look at the Dow Jones Industrial Average. We're going to have to wait a little bit for this market to come alive. It's a little bit early yet in the day. But it was up 91 points on the day yesterday. I'll tell you what. I think personally, I mean, it's a few more minutes until this market opens up, but I don't think it's going to be a big down day today at all. I don't think they've realized yet anything about the Brexit vote. It's going to dawn on them when the vote comes in tonight, which way it's going to go. Now let's take a look here at oil prices. Oil prices, we've been seeing them go up rather steeply. They've went up above $60 now. They're 1.11%. That's 1.87%, I should say. They've went up. $1.11 they've went up to over $60 now. And this has just been a steady increase. This is a manipulation. OPEC is manipulating the oil market upwards, whereby gold and silver are being manipulated in the opposite direction, downwards. So we got two manipulations going on, two markets that are manipulated. Both of these markets respond to the dollar in a very similar fashion. They're both commodities. Generally speaking, if the dollar goes up in value, it means that you can buy more oil with it. And vice versa. If the dollar goes down in value, you can buy less oil with it, because it's been loosely pegged to the oil for the longest time. That peg is in the process of breaking right now, and this is the main reason why the dollar is going to be getting in trouble, you know, is because of the peg to oil. Now, it costs these oil guys more and more money to get this oil out of the ground because of inflation. Every time they go out, say they have to frack a well, you know, and they have to go down and put steam pressure down in there and get more oil out. Well, they have to buy stuff just like us when the equipment that they need. They have to go to the hardware store just like we do when they're putting up an oil rig. You know, they send the guy in, hey, get in there to the hardware store and buy us a new hammer or whatever. They have to pay more money for that stuff. And you see the price increases. Well, they have to pass that on to the price, the overall price it costs to get per barrel of that oil out of the ground. It keeps going up higher and higher. So they got to get more cost at the pump, ultimately at the end, you know. Let's take a look now at U.S. Treasuries. You know, we see this problem that caused the inversion. We're seeing a little bit of a snapback now today. You know, they're all moving pretty good. Right from the 1 month, we got the yields falling on the 3 month, and unchanged on the 1 month, but the 3 month is falling, but only marginally. But we see an awful lot of these yields rising, and quite a lot too. The middle of the yield curve, we see the most rise, you know, on the 2-year, 3-year, and 5-year, over 4 basis points apiece on all three of those. And so yields are starting to rise again today on the bonds. So the 3 month is at 2.45. The U.S. 3 month is at 2.42. U.S. 6 month is at 2.45. U.S. 1 year is at 2.41. U.S. 2 years at 2.26. U.S. 3 years at 2.21. The U.S. 5 years at 2.24. The U.S. 7 years at 2.32. And the U.S. 10 year is at 2.42. And the U.S. 30 year is at 2.83. Now, what we notice about this is the ones that are the most inverted are the 7-year, 5-year, 3-year, and 2-year. The 2-year has a rather severe inversion. It's 2.26, and the 3 years is 2.21, whereas the 1 month and the 3 month treasuries and the 6 month and the 1 year are all inverted. So there's still an inversion, but it's mostly in the middle of the yield curve. Now let's take a look at the U.S. dollar index. And what we're looking at is 97.09. and the dollar has fell a little bit. It was up a little bit higher yesterday, but she's getting back down toward 96 again, and this is helping gold and silver. You know, the fact that the dollar index is slumping off a little bit. It's also helping oil. So anyway, listen, thank you guys for listening to this market report, and we'll catch you again on Monday when we actually see the results from the voting in the United Kingdom. Bye-bye for now, guys.